You are having a wonderful evening. Good evening, traders. I trust you are having a blessed Sunday evening. Welcome to MGR Forex Trading, and today this is our live stream, our live weekly recap, and our analysis for the coming week as well. So this is fantastic. It's a wonderful time. It's a wonderful opportunity for me to be able to present this to you, and simply for us to go ahead and engage and analyze the markets together live. And you can of course ask me your questions live whilst I analyze, and I'm hoping you can take something, one or two things away from this live stream. With that being the case, I'm going to hop right in. I'm going to hop right in. The first thing we do whenever we go ahead and whenever we find ourselves simply analyzing for the coming week, what do? What's the first thing that comes to our mind? The first thing that comes to mind is simply to go ahead and to have a look at the fundamental news events. What is actually occurring over the course of the week? What's happening? So let's have a look, and let's first dive into that prior to even doing any analysis. We need to understand what fundamentals are going to be happening, what's going to be releasing out within the week, and how do we trade around that. Because at the end of the day, what really moves the markets is not your technical analysis, it's not your system that you have in place, it's actually the fundamental news events. So you need to ensure, does your system align, does it allow you to trade during fundamental news events, or does it perhaps not allow that, and do you need to adjust your method and perhaps trade in the morning before that major release, or do you have to trade perhaps more in the evening after that initial volume of that release is taken out of the market? So that is something that's very, very important. That's number one. It's the first thing we're going to be doing is let's ensure that our method aligns with fundamental news releases, and if it does not, then we need to ensure that we are adjusting our method in accordance with that. Alright, without further ado, I'm going to quickly rub my eye. Gosh, the light in here is a bit very, very bright for me. So of course, I'm going to go ahead and open up my chart. I'm very quickly going to have a look at Forex Factory. You can use investing.com as well. That's normally where I find myself having a look at the recent news events, and that's very, very important. So I'm going to hop right in. No fluff, no beating around the bush. We're going to hop right into this, and of course I only have an hour with you guys, so I want to ensure that I'm making the absolute most of the time that we have available. So I'm going to have a look at our calendar, at our Forex calendar, and I'm going to be looking over the course of next week, which will start from the 18th, being Monday the 18th, all the way till Friday the 22nd. So I'm going to go ahead and I'm going to very quickly move my tab all the way to the right, so you're able to see my screen. I'm going to move it right over here, and you should be able to see. I'm going to have a look and see over here. I'm going to zoom in a little bit so we can very clearly see what exactly it is. Let's go in a bit more. Alright, I think that is large enough for you. You should be able to see exactly what fundamental news events are being released. So Monday we don't have much. Mondays we are very, very fortunate. Monday, it's only low impact news releases. You can see over here from 12:30 a.m. to 4 p.m. Very, very basic, low impact news events, not too bad. I love these as they will provide enough volume for technical trading, so you can use your system, whether it's SMC, whether it is ICT, whether it's support and resistance, whether it's pivot points, trend lines, whatever it may be, supply and demand, whatever it may be. They will move very, very well, and they will perform very, very well with low impact fundamental news releases, so that they can at least provide that volume that you need for price move within your technical analysis direction. That's that. That's wonderful. Let's have a look at Tuesday. On Tuesday, we have a bit of red folder news for the Canadian dollar. However, that is not too important. It's more of the, it's their CPI. Of course, if you are trading CAD pairs, Canadian dollar pairs, then of course either base or quoted, and of course there will be a huge amount of volatility around 2:30 p.m. at that time. So that's very important to note and to journal down in case you do find yourself having a look at the USD CAD here or there, or CAD JPY, quite a popular pair that is normally traded amongst us traders. So that's something that you can analyze and have a look at and take note of. Aside from that, we have Wednesday. Wednesday, there tends to be a little bit more of rate folder news. We have some New Zealand dollar rate folder news, CPI for the pound, and of course that will impact a number of GBP pairs, and of course your NZD pairs, but more of the minor of the major pairs, not as volatile, but again it will impact NZD base and quoted Forex pairs as well. That's important to note. Of course, for us, we look more towards the US dollar, so there is some medium impact news over here, along with FOMC that will be occurring. FOMC is one of those news events that unfortunately it depends on how it goes. It depends on what's actually being spoken about. Unfortunately, that's something we cannot predict as close as what you can predict with NFP and CPI. FOMC, it's not too bad, but it's not something you can always find yourself assuming that there's going to be quite a huge amount of volume that occurs. If the topics that are being discussed are not too important to the economy, then of course it's not going to have that impact that it normally has, that we normally expect FOMC to have. There has been times in the past where FOMC was massive, 500 per moves, 200 per moves, but recently I've noticed that it hasn't been as volatile as what it normally used to be in the past, and that's something to note. Again, that is at 8 p.m. So if you are trading around 8 p.m, again, if your system allows you to trade news events, fantastic. If it does not, if you're perhaps a scalper and not a swing trader, I would recommend staying away. But again, that's up to your system and how you go ahead and how you find yourself trading. Aside from that, let's move right into Thursday. And Thursday again, I think this week is going to be quite a technical week. There are some red folder news for some of the major pairs, but there are a huge amount of opportunities that will find themselves opening up over the course of this week. It's fantastic because you don't have every single news event on each and every single day. You don't have the pound, the euro, the dollar on one particular day. You have them split up within the week so that you at least have some time. At Monday you can take some positions on all pairs. Tuesday you can avoid the Canadian dollar. Wednesday you can avoid NZD and perhaps a bit of USD in the evening. Thursday you can avoid the euro a little bit, the pound, not too bad, but you can avoid those events, especially if you are a scalper. It's important to note these events are volatile. They can go either direction, and you want to ensure that you are setting yourself up for the best possible chance of success within the market. It is a game of probability, so you have to ensure that, and you have to take note that the odds can be in your favor or not in your favor or against you. And again, as an experienced trader, you would know this. As a beginner, there are sometimes you have to burn your fingers, and you definitely will learn thereafter. It's all a learning journey, and I think Thursday is going to be quite a massive day of news events being released. So that's going to be quite a hectic day of news releases. PMI doesn't move too well. It acts more of medium folder news, to be honest with you. So that's quite nice over the course of New York session for the US dollar. I think that's going to be a nice form of volume that can be injected along with New York Stock Exchange Open, especially for your stock indices. But the pound, PMI, and we have 230 unemployment claims from the US dollar. This of course is going to ensure that this will be quite a massive event. I can assure you that this will move USD base and quoted pairs quite significantly. So watch out for 230 on Thursday. That's going to be quite an interesting event. And we have another volume injection again at around 3:45 p.m. slightly after New York Stock Exchange opens. So there's going to be quite a bit of volume on Thursday. Be mindful of that. And yes, that's going to be Thursday. Friday, not too much. Friday's a bit, it is. Friday's always your slower days, as you can't really find yourself placing positions unless you want to hold them over the weekend, over the course of Friday evening or Friday even afternoon, if you don't need to take profit within the New York session. So Friday is always one of those days where it's a bit of a give and take. You have to determine can it align with your method, and take it from there. But yes, it's going to be quite an exciting week of trading. I'm looking forward to it. Lots of opportunities, as always, as every single week. Lots of opportunities, and I'm looking forward to see what exactly can the market open up for us. What can occur? How is it going to play out? And it's going to be great. It's going to be fantastic. I'm looking forward to it. Next step. Now that we know to a degree that we're having quite a wonderful week of news events, lots of volume, lots of volatility that's going to be expected this week, let's go into our charts. Now I'm going to be strictly USD base and quoted pairs. I'm going to be strictly United States dollar with my analysis and with my expectations for the week to come. And the first things first, I'm going to hop to DXY. So DXY, what is DXY? DXY is the dollar index. This essentially is the value of the dollar, and we always start at this point. We cannot start anywhere else. We have to go ahead. We have to start at the US dollar. This is where we somewhat start developing a bias, because whatever the value of the dollar is going to impact all USD base and quoted pairs. Each and every single one of those will be impacted by the valuation of the United States dollar. It's very, very important to note, these correlations will always occur. You will have both a negative and a positive correlation, either between USD base and quote. Of course, a positive correlation between USD quoted pairs, USD base pairs, and a negative correlation between USD quoted pairs. What does this mean? What are all these terms? If you're a beginner, you might be overwhelmed. Don't worry about it. I'll explain it to you so that even a 5-year-old will understand. What does this mean? It basically means that when the value of the United States dollar rises in value, USD based pairs, or USD JPY, USD CAD, they will also in tandem rise alongside the valuation of the dollar. On the contrary, USD quoted pairs, this is your AUD USD, your Euro USD, GBP USD, Nasdaq, your Dow Jones, S&P 500, they will all then have a negative correlation. So if the value of the dollar increases, their stock prices then decrease. Hope you're still with me. So let's go ahead, and I'm going to hop onto my 1 hourly time frame. Why do I start on the 1 hourly time frame? Because I am more of an intraday trader. I prefer getting into the markets and out of the markets within a week, within a day actually, but ideally within a week. And I don't mind holding my position for over the course of maybe a day or two. I don't mind that, but I always prefer to exit my position within a day. I am more of a scalper. I do tend to find myself erring more towards on the scalping side. That's just perhaps my preference. But of course, when it comes down to your method of trading, now you might prefer holding your position over the course of a month, over the course of 2 weeks, 3 weeks, 1 week, over the course of a few years. It comes down to you and your preferences. I'll be analyzing for the week, and that's what we'll be doing over the course of this live stream. So let's have a look. I predicted this to occur. CPI was going to have a wonderful run towards the upside. That occurred within last week, and it did. It had a beautiful run to the upside, good number of pips. I was very, very happy with that analysis. we were running up all the way into this level of resistance, and I predicted that if price were to respect this level while the break through it, price would then dip, and as price falls towards the downside towards this level of support, then CPI will be finding itself having a run towards the upside, which it did. You're wondering if you can analyze and predict the direction of certain fundamental news event releases, especially the major ones being NFP and CPI. CPI ideally, because CPI is my most favorite position and news event to place any positions with during that time. It moves the cleanest, and also it does in the past 6 months, you could say 8 months now, if you include August, it moves within one direction. It does not find itself throwing a wick down and stopping you out, or having a bit of erratic movement before the actual volume move. It simply moves in one direction, and that's what I love about CPI in comparison to NFP and FOMC being the two other big fundamental news event releases. Of course, unemployment claims is one of them as well, but it's not as massive as consumer price index. But yes, looking at that and understanding that, I'm going to continue my analysis from where we were. Of course, at a glance, looking at this chart, we are very, very clearly in a downtrend. Very clearly, very evidently, we're moving towards the downside. What does this suggest to me? It suggests that we can potentially continue seeing weakening in the United States dollar. That's number one, meaning USD base pairs will be continuing moving within that downward direction. And USD quoted pairs will find itself moving more towards the upside. That can find itself occurring. In fact, I'd argue that that is definitely what is going to be occurring as well. So with that being the case, and that is somewhat what I'm thinking of and what's going through my mind at the moment, what I also have to consider is the fact that we're tapping a very strong level of support. Such a strong level that it was respected again. It was respected previously in the past, as you can see with this lovely head and shoulders chart pattern that occurred. It was respected. This was a respect. Not a perfect respect, but it was a respect nonetheless. It was respected a number of times in the past as well. It even acted as resistance in the past. So this is a very, very important level, and we are right within this level at the moment. What does this suggest to us? To me, it suggests that price can have an additional respect of this level and have a further continuation run towards the upside. We unfortunately did not get a clean respect on this trend line, which would have been wonderful if we did get another respect on this level over here. But this trend line is ripe. What I would say is ripe. It's looking quite nice to me for price to have a run towards the upside and to break this level from a technical perspective. Could fundamentals work in my favor? Not over the course of Monday, I'd like to presume so, but perhaps over the course of Tuesday, perhaps over the course of Wednesday, it might occur. Looking at this, that is somewhat of a move towards the upside, keeping in mind that the original move, even the respect of, how can I say, even the respect of this level of support, even that alone will end up having, or will end up impacting USD base and quoted pairs significantly, may I add. It means that there will be short-term strength within the dollar, and with that short-term strength, base pairs will increase in value and USD quoted pairs will decrease in value. So that's something to consider. That's something to take into consideration. Yeah, it's certainly something that you have to think about. Of course, the price action on those particular asset pairs will dictate to you and to us as traders, as retail traders, that a changing market structure can occur. But again, let's see how that goes. Let's see how that pans out. Let's see what exactly is going to happen in that regard. But in my mind, I'm hoping that price finds itself having a beautiful run towards the upside. We might in the short term, and I'll say short term within Monday, we might find ourselves playing within this level over here. So you might find ourselves playing within, I'll change the color so you can see it more clearly. Okay, that's not exactly the best color. We might find ourselves playing within this level of support. I won't look at this ascending trend line, because price will be able to play around and still have respect of that level of support. So to me, I am not concerned about the trend line too much. It simply just looks nice on your chart. It looks neat on your chart to indicate that there is somewhat of an uptrend occurring. But my only concern right now would be if price would at least break this trend line over here. Only then would I be interested in looking at a potential short-term run towards the upside into this level of resistance. That is all from my end. That's what I'm looking at over the course of next week. So I'm predicting that price will certainly find itself being. It's likely that there'd be some dollar strengthening for price to run at least back up into this level of resistance, and perhaps even further on Thursday. That could occur. It's certainly far likely to occur. If that were not to be the case, what would then occur? I'd be looking at price action to at least break below this low. This will then signify to me that price is ready to tap this level of support, meaning dollar weakening. And with dollar weakening, it means that USD base pairs will continue in its downwards direction, and USD quoted pairs will continuously rise towards the upside. Will continue to rally. That is, in theory, somewhat more likely, but as we are at an area of concern, we are at a point of interest, we are at a level, a very important level, very strong level, that we can see some price action occurring within this level of support. That is me. That's what I believe is going to occur. And of course, all you have to do is simply take that correlation with this lovely analysis on the dollar index and find itself actually translating that into USD basic quoted pairs. So we have this wonderful analysis. Let's find ourselves perhaps having a look at a couple of Forex pairs. My favorite pair, now add to this, my favorite pair, the one pair that I absolutely enjoy and I love, that is AUD USD. That is absolutely the greatest pair. It moves phenomenally. It's more of the what I call the minor of the major Forex pairs. So you have your major Forex pairs, UD USD, GP USD, USD JPY, USD CAD. They're more of the bigger pairs, the major pairs. AUD USD is a bit smaller. Likewise with NZD USD. The two of the smaller pairs. They're not as volatile, but they move very, very well according to price action and according to these wonderful levels. They move amazingly. Once you spot I wouldn't say a psychological round number, once you spot a point of interest or area of concern where all these points is culminating into one location, you know already that's an area I want to look at. It respects Fibonacci quite well. It respects pivot points. It respects support and resistance. And more importantly, when it has massive moves, it respects order blocks. at extreme levels. So you can get like amazing entries and run insane risk to rewards with your positions on those asset pairs. If you can at least identify where the extreme order block is it untested? If it is untested, that's amazing. I don't prefer to trade that way because it simply takes too long to be patient and to wait until price can actually find itself moving towards a level like that. I prefer to be in and out, as I have mentioned before, and that's simply the way in which I trade as my preference once again. Let's have a look and see what Nasdaq is looking like. Nasdaq is a wonderful method. It's a wonderful asset pair, and there's some amazing methods that you can use to trade on Nasdaq. It's simply one of those things that's just great. It's a wonderful asset pair. One of the biggest, actually, if I'm not mistaken. Top 100 tech companies in the US. Very, very big stock index. I'm on the hourly time frame. And once again, as I mentioned, seeing a lovely run towards the upside. Very, very bullish. And you'll see that CPI, I believe, was somewhere around here. It was on Tuesday, if I'm not mistaken. Yes, it was around here. Beautiful run towards the upside. Just kept on going. It was insane. And that's great. That's fantastic. The idea behind this is that if price were to break at least below this level over here, or I'd even argue I'd say below this level here, it's a very weird level that you might be thinking, what on earth? But yep, if price were to go ahead and break below that level, then we are definitely going to find ourselves having a respect of that level of support, that powerful level of support on the dollar index, and have a continuation run towards the upside. So that could be something. If we break this level, we will continue. We will continue in that level. So that's going to be very interesting to see. It will be very, very interesting to see. I am not biased. I am not swing trading, so I'm not of the opinion that price simply find itself having a lovely run towards the upside or to the downside. I'm simply waiting for a high probability trade opportunity to occur. So as long as price action can find itself opening up a position for me, then I'll be going ahead and taking that position. I don't always have a bias. Price can move wherever it would like to move. I will simply adjust, analyze, and then find myself reacting to the price action that the market shows me. So essentially what this means is that I'm simply waiting for the market to reveal its hand, and I will then react accordingly to that. That's my method of trading. I prefer that. Yeah, I prefer that. But yes, that is Nasdaq. I have a special indicator that I would implement right now. And of course, it is suggesting to me that price is going to have a lovely run towards the downside. But again, I think that yes, we have hit take profit 1, which is awesome, which is wonderful. But at the same time, I do believe that we could see a further run towards the upside. We're still in a very much bullish scenario here. If I pull out my Fibonacci tool from this low to this high, we haven't touched the 0% as yet. We somewhat showing some level of respect to the 50% on the Fibonacci, but we can run towards the 79% and then have again, like I mentioned, we can find ourselves having a lovely respect on this level and continuously run within that direction towards the upside. That's one of the aspects. All we can do is simply wait, watch price, see what it does. If it breaks below this level, yes, in theory you'll be holding to take profit 3, but I expect a further continuation run towards the downside. This would also mean we have taken out the recent swing low, and if we've done that, it means that we have to then have a sell order type of Fibonacci, meaning we should see a correction towards the upside and a further continuation run towards the downside. That's what is potentially going to occur, and that's me anticipating what price is going to be doing. If we simply respect 50%, that's unfortunate. You would then have to go to your 30-minute time frame and your 50-minute time frame to anticipate a change in market structure at this level. So something needs to tell me, can we actually see a change in market structure? And if we can, what would that be? I already see a bullish flag, and if that is the case, then what occurs? So that's one of the things that can potentially occur. Again, all we have to do is simply wait and be patient, let the market reveal its hand and react accordingly to that information that comes through to us. So let me go ahead to my favorite pair, AUD/USD. AUD/USD. It's been quite an interesting couple of days. Lots of erratic price action. And again, I'm going to show you something interesting. This over here, untested order block. Price ran itself quite far away from this level, while it found itself having a huge displacement to the downside. Lots of imbalances within price, as well as price moved significantly towards the downside. Beautiful order block. Price pulled up. Lovely position. Clean, to the point, and wonderful. And of course, I had a lovely entry, because that's the method. That's my system. So yeah, that is that. That's AUD/USD. If you were to analyze this, what would go through my mind? First of all, your trend lines don't work very well on this particular asset pair, and yeah, all I can do is simply, let's have a look at support and resistance. That's number one. Where are my levels of support and resistance? That's a very strong level that you can see. And where are we in between? The first thing you do when you analyze any particular asset pair, you need to ensure that you frame your picture, that you frame the market so it can be moving in between two levels. Once it's moving in between two levels, you're then able to continue your analysis with trend lines, with Fibonacci tools, with chart patterns, with candlestick patterns, with many other patterns that you can then implement and see how many confluences are coming together at a single point, and that point then becomes an area of concern or a point of interest, also known as a point of interest. So what chart pattern do I see? I see a M formation, somewhat pulling up into this lovely interruption candle. So we had all these bearish candles and one bullish candle. This is also known as somewhat a level of supply. Doesn't always work exceptionally well, to be honest with you, levels of supply, but that is a level of supply, and price can find itself respecting that level. The next level that I'm thinking of is the neckline of this information. So usually what occurs when a charting pattern happens, when there is a information, when there is a head and shoulders pattern, cup and handle, W formation, M formation, whatever it may be, triple top, triple bottom, what happens is the neckline will find itself being tested again. So price will make a huge effort, well, significant effort, to move back and price in that neckline, and that's why it's called a charting pattern, because all we can have a look at, analyze, is from a technical perspective and see patterns and recognize those patterns and act accordingly when the pattern occurs again in the future. So when we have information, usually we find ourselves going back to price in the neckline, respect the neckline, and have a run to the downside. Now it can occur where price can simply move right through this neckline and not respect it. That can occur if there is no change in market structure at that neckline level. So what does it mean? It means that in the initial run towards the downside, price changed market structure from a bullish market into a bearish market, and that means the price is now bearish, and lower time frame fuels your higher time frame market structure. So lower time frame, in order for price to have a correction, is now bullish, and with it being bullish, it now has to change from a bullish market structure into a bearish market structure in order to respect that double top neckline formation. That is what has to occur. Now there are times where there is no respect and market structure on the lower time frame remains bullish, and that bullish market structure on the lower time frame then fuels the higher time frame market structure to turn from a bearish market into a bullish market. That can occur. Now we were bearish, and we still somewhat are bearish, and we're coming very, very close into our 50% level, which is lining up quite nicely with our level of supply. And unfortunately, it would appear that this wonderful neckline is sitting somewhere in between the 50% level and the 79%. So that's a very odd one. I am not a fan of that. In that scenario, what occurs is I simply wait for price action. As price action touches this 50% level, I simply wait for a change in market structure, because price can respect either this level of supply and the 50% Fibonacci, or it can run right through and respect the 79% and have a further run and only respect it there and then run down. Now I want to minimize my drawdown. Drawdown is when price runs against your direction and you end up losing money from your position. So let's say you place a sell position at 50%, that's pricing at 0.65 to 60, and price continues against your direction, against your prediction. It means you're now losing money. Now I want to avoid being in that position in drawdown. I want to find myself running almost immediately into profit. Of course, you will be in drawdown as soon as you enter a position to pay for the spread, but I want to run immediately into drawdown, into profit, into drawdown. Said no trader ever. I want to do that. Now, I won't always get that right, but it certainly can occur. And for that to occur, it means you have to be very precise with your entries. And to be precise with your entries, you have to ensure you are working with them, or you are trading with the momentum of the market. Is it bullish? Is it bearish? Are you trading with the trend? But that essentially is what it means. It means, are you with the momentum of the market? If you are not, you are on drawdown before price eventually moves within your desired direction, within your bias. So that's a very, very important point to note, and that's exceptionally important. So yeah, ladies and gentlemen, I think that I've given you a masterclass in price action, absolute masterclass in price action. You should have taken at least one or two things away. For some of you, I know it might be a reiteration of what you already know. You know this. It's simply a refresher, simply a reminder that price action still works. Support and resistance still works. Nothing has changed. It's simply a reminder that that is the case. So ladies and gentlemen, I want to thank you very much for your time. I want to thank you very, very much for your time. I also want to mention that, of course, at MGR Forex Trading, we offer mentorship. If you believe that this is something that you need to do, if you want to further your knowledge, if you want to have one-on-one mentorship with me, CEO and founder, I have 6 years of experience, I am available. I'm here. The link to my website is in my description. You are welcome to send me a message. My contact details are there. Join our free Telegram group. We have that. I post my analysis in that group, and we are here to expand. We've been in this industry for many, many years. We've seen the market go through COVID. We've seen the market go through ups and downs, and we have traded through those financial crises. We've done that, and we've come out on top. Again, we are not simply an independent institute. We are also affiliated with XM Brokers South Africa, one of the best brokerages within the world, one of the best in the world, and one of the best in South Africa. If you've noticed on the top right hand corner, there's some text pop-ups that occur, and those are simply, of course, saying that XM is absolutely just powering the trades and it's a fantastic brokerage. They offer one of the best withdrawals speeds in the industry, and there's one thing that they offer that no other brokerage offers in South Africa. There's one thing that they offer and no other brokerage in South Africa offers. Now you might be wondering, what is this? I'll tell you. They are the only brokerage that offers a drawdown bonus. Now, each and every single brokerage offers some type of deposit bonus that only allows you to enter into a lot size or into a position size that is far larger than what your account can handle. So usually you would like to risk 5% or 10% on your account per position to allow you to at least have either 25 positions or 20 positions, or you can have 10 positions per your account until you lose all the money in your account. So if you were to take 10 positions with a 10% risk per trade, and you lose all 10 positions in a row, which should never occur ever. If it does, then something is wrong there. You're gonna have to do some analysis on your method of trading. And of course, with 20 positions, you should be able to last at least 2 months with that lot size and with that risk management. And they are the only brokerage that offers you a drawdown bonus. What is the difference between a deposit bonus and a drawdown bonus? Now, they offer a deposit bonus as well. XM Brokers offers you a deposit bonus as well as the drawdown bonus. What is a drawdown bonus? A drawdown bonus means that if you were to place a position, let's say you deposit $10 or $100 and you risk your entire $100 on one position. Let's say you took a signal from a signal provider. We don't provide signals at the moment at MGR Forex Trading, but let's say you took a signal from a signal provider and you deposit $100 and you risk your entire $100 to potentially make $200 or $300. Understandably, why you would do something like that. Very risky, and you're more than likely to blow your account because signal providers generally tend to not have the best win ratio, even though that's what is marketed. Your due diligence when selecting your mentors and your financial service providers is important and should be something that you take, that you find yourself going ahead and doing your assessment on. With that being the case, XM offers you the ability and a feature on every account that if you were to run negative $100, the position will not close until it runs negative $150. If you have deposited the $100 in one transaction. So for every transaction that you deposit, you get a 50% drawdown bonus. What does that mean? It means that you are able to run an additional 50% on your account in the negative should your position not go in your direction. No other brokerage offers this feature. No other brokerage, no other reputable brokerage offers this feature. With XM, you can withdraw your money, you can deposit your money, you can withdraw it. You can do all of that. It's exceptionally transparent, and with me being the affiliate, I can assure you that if you would ever run into any problems, anything like that with my existing traders, they never have any problem. But if they ever were to, if a withdrawal is taking too long, if a deposit method is not working in this regard, I can raise those issues as I'm an affiliate with them. So of course I'm able to speak to individuals who work directly within XM, customer support managers, whatever it may be, and I can assist in that regard. This is a wonderful opportunity. This is an opportunity that all of the MGR traders are taking advantage of, and they are making amazing amounts of money. And they are enjoying themselves. This is an opportunity that I am sharing to the public, to you watching at the moment, and I'd recommend that you find yourself taking advantage of this. You might be skeptical, and that's fine. I will be here by my desk doing these live streams, trading live eventually. I intend to. So I have to find time management for that. So of course, as a scalper, your positions don't always open up exactly when you want it to open up. It's going to be good. It's going to be fantastic. I am looking forward to what this has to offer, what this endeavor has to offer. And I'm inviting you, join the free Telegram group. Use my analysis. It's a free resource. If you are serious about wanting to upskill yourself, if you are serious about wanting to succeed in the financial markets, genuinely, perhaps you're still on the fence, and that's okay. I was there as well. 7 years ago, I was on the fence. I didn't know what to do. But if you're willing to take that action, no risk to you. All you simply have to do is watch. You can sit on the fence, sit back. Who is this guy? Who is MGR Forex? I never heard of them. Never seen them. You're welcome to look at my social media platforms. You'll see that I post consistently. You'll see that I have consistency within my uploads. You'll see that I'm authentic. I'm a real person. I'm not a scam artist. I'm not going to scam you whatsoever. I'm affiliated with one of the biggest brokerages within South Africa. This is a wonderful opportunity. I'm hoping you take advantage of it. You don't have to. You're welcome to watch. You are welcome to watch, but always remember that not taking a step is only going to leave you further and further behind. You're going to see other people taking action, and they're going to go ahead and continuously move forward. And you may be wondering to yourself, listen, I think I need to start making a decision here. But I invite you, watch this journey, and watch how MGR, and I'm going to announce this, and watch how MGR Forex trading takes over the industry. We are going to be the biggest Forex mentorship company in South Africa, number one, and then we'll branch out and go international. I'm telling you, and you will refer back to this video. Ladies and gentlemen, MGR Forex Trading, we will be the best. With me as the head mentor, with me as the founder driving this business, we definitely will. There's no doubt about that in my mind whatsoever. But yes, what a wonderful live stream, ladies and gentlemen. It's a fantastic time. Thank you so much for your time. Thank you so much for allowing us to go ahead and to be able to actually do this. To be able to really just go ahead and conduct this. have this opportunity for you to learn from me, from my experience, from what I've done, and it's going to be great. Traders, MGR traders, viewers, have a blessed evening further. Keep well, be safe, and I'll catch you all tomorrow. Once again, same time, same place, 8 p.m. South African Standard Time till 9 p.m. Let's go, let's trade, and let's make some money. Have a wonderful evening. Keep well, be safe. Cheers, everybody.